We have crazy news that happened last week. Kraken is seeking to raise at $20 billion valuation.
LSE is feeling the pressure. It's an interesting observation to see how it will develop.
The company believes US market provides deeper liquidity, stronger institutional investor participation, and of course, higher valuation for growth-focused technology companies.
As you know, many European fintechs tried to crack US market. Not all of them have been successful, but Circle secures 222 million from BlackRock and Apollo Global Management to support the ARC blockchain. It shows that institutions' confidence is increasing in blockchains. Crypto industry is evolving from kind of a surviving mode into full-scale financial platforms.
The tokenization of real-world assets markets has grown over a 200% past year and now exceeds $32 billion.
It looks like the traditional banks.
Hey everyone, welcome to another episode of On the Ground. We have crazy news that happened last week. We highlight a number of them, so we went through them so that you don't have to. Let's start with the first news, and it's a breaking one for the UK and European market, guys. Wise moves primary listing to the US. If you guys remember, initially Wise was listed in London Stock Exchange, but this week they completed their listing on NASDAQ. The reason is the company believes US market provides deeper liquidity, stronger institutional investor participation, and of course, higher valuation for growth-focused technology companies. Otabek, with the latest funding rounds, especially around AI, it seems now majority of the funding and investors are in the US. That's why all the big companies are trying to be listed there. Another example is Revolut. They are also considering the US. They are still considering. I think they are still in the middle, but the London is trying to hold them here because, again, they are one of the biggest European and the UK companies. But their CEO, Revolut CEO, said maybe they will consider the US. So Wise, if we go back to Wise, it will still maintain a UK presence, but it seems like decision signals where management sees the long-term future of Wise. Because again, and in Europe and the US, in the UK, Wise is quite well known, but in the US, they are not that well known. By moving their listing there, I think it opens more door, and they will start investing more into the US market.
We need to distinguish here, obviously, the public markets with the actual markets. As you know, many European fintechs tried to crack US market. Not all of them have been successful, but here we are talking about Wise's intention to go public in US, which raises the question of the London's status in the global liquidity market. Why the players in London Stock Exchange are increasingly looking out over the pond to the US Stock Exchange. Will London retain its global fintech dominance for its own European companies? That's something that's developing, and Wise's move will, I think, will be a kind of a test for the European stock for the London Stock Exchange as well.
I thought they wouldn't move, actually, because when they announced that they are moving their listing to the US, there was a tension even between the current management of the Wise and with one of the previous co-founders of the company. He said the company shouldn't do that. They should stay in the London. So there was a tension, and I thought they wouldn't do it, but it seems like the company ultimately moved their listing to the US.
So yeah, I think LSE is feeling the pressure, London Stock Exchange, and the companies listed there are increasingly hitting the ceiling and trying to look out for the different markets. So it's an interesting observation to see how it will develop. On the other news, Circle secures 222 million from BlackRock and Apollo Global Management to support the ARC blockchain initiative. Circle raised fresh capital to accelerate the development of ARC, which, as you know, it's blockchain infrastructure. The major traditional finance firms like BlackRock and Apollo has participated in the round. It shows that institutions' confidence is increasing in blockchain, something we've discussed in our previous episodes as well. ARC is designed to support scalable settlement, tokenized assets, and programmable financial applications for enterprise and institutions. So the race further strengthens the Circle's position beyond the stablecoins to the broader financial infrastructure.
Yeah, for the people who don't know what ARC is, ARC is a public blockchain designed for institutional finance. So it's designed by Circle, and now they're basically investing more in that direction. And now the company, basically the ARC is valued at $3 billion after this fundraise. And A16Z Crypto was one of the leading investors in this round. And I think the future movement or developments in this direction will be very, very interesting, because again, another example of layer one blockchain was by competitor of Circle, Stripe. They also launched their own layer, blockchain layer, Tempo, and they're also growing in this direction. And I'm hoping that traditional asset managers will continue investing in this direction. And it seems like that the future is, if you are a big company, in developing your own blockchain rather than maybe relying on third-party providers. Following this news is again another crypto company, Kraken, is seeking to raise at $20 billion valuation. So Kraken's parent company, Payward, said they're looking for fresh funding, and the valuation will be approximately $20 billion. The company is preparing operationally and financially for a public IPO very soon. They at one point they want to do that, but they postponed that. Now Kraken is expanding significantly. Last week we reported that they acquired another company, Reap, for $600 million, if you remember. And I think basically the funding would strengthen its balance sheet and provide additional capital for expansion during a period of renewed crypto market momentum, which everyone is hoping for soon, because again, we are still in a bit of a bullish market if you look into crypto, but things may change very, very quickly in crypto markets.
A lot of activities in crypto exchange market. Crypto industry is evolving from kind of a surviving mode that they were experiencing a few years ago into full-scale financial platforms. Companies like Kraken are thinking about IPO readiness. They're thinking about institutional products and long-term infrastructure positioning. So it shows that crypto is gradually integrating into the mainstream financial market, something that has been talked about a lot and what we are now starting to see. And following the crypto and blockchain news, the next headline comes from JPMorgan Chase. They filed for tokenized money market fund. The JPM continues expanding its blockchain and tokenization strategy. And the initiative would allow the traditional financial products to exist or to move to the blockchain infrastructure. So as we can see, it becoming mainstream. It is being available for traditional products, financial products as well. The tokenized fund could improve the settlement speed. It could improve the operational transparency. It has many benefits: collateral mobility, liquidity management, and so on. And the filing also adds to JP Morgan's own growth portfolio as well of digital asset initiatives, which includes, as you know, some tokenized deposits, blockchain settlements, and so on.
Let me add a few interesting numbers here. The tokenization of real-world assets markets has grown over a 200% past year and now exceeds $32 billion. Treasury products have emerged as one of the fastest growing segments as institutions seek a way to earn yield on on-chain cash. It seems like this is one of the most attracting features of tokenization. But I'm really curious where this market will continue growing, because again, everyone is trying to tokenize traditional assets, starting with stock, then moving into other directions. And JP Morgan has been among the most active traditional banks, basically embedding blockchain infrastructure in TradFi ecosystem. In December, the bank launched the tokenized money market fund called MONY, it's MONY, on Ethereum, giving institutional investors blockchain-based access to basically short-term cash products. Okay, guys, next news is also about JP Morgan Chase. the bank is finally launching its Chase digital bank in Europe 5 years after expanding into the UK market. Basically, the bank opened 6 months ago its headquarters in Berlin, Germany, and finally preparing to launch the products in Europe. It's not simple to launch a new product, especially digital bank in Germany. It's quite challenging because German market is rather more conservative, let's say, if we compare it to the UK market. The expansion basically follows strong growth of Chase in the UK, which demonstrated demand for digital native banks and products. But I'm really curious how this will evolve in Germany. Europe remains one of the largest retail banking opportunities, according to the news. Globally, despite heavy competition from neobanks and incumbents, basically in Europe, one of the biggest digital banks is Bunk, BUNQ. They're also active, and we have N26 in Germany, another major digital banking player. And I'm really curious how the adoption of Chase will evolve, because Germans, as I said, they are not very, I mean, keen to adopt new products. Because when I speak, for example, to my friends who are in that market, they say like we still use more traditional products and services when it comes to banking, even though we have digital banks, as I mentioned, N26 and others in the market.
Well, Sam, it looks like the traditional banks are getting better in cracking the fintech game. What do you think? It has been they have been trying to do it for quite a while. There were a lot of initiatives to replicate the fintech operating systems by the traditional banks. Not all of them were successful. This time, they're trying to, instead of competing through branch networks, they're competing through the user experience, mobile distribution, and product velocity. It also shows that the large banks are becoming more aggressive in defending consumer relationships against the digital challenges. But I still don't think that the banks are agile enough and lean enough to replicate the operating systems of the banks, of the challenger banks, of the neobanks, and the fintech new startups, the technology first companies are still having an edge because of the lack of the legacy systems that the traditional banks have.
Otabek, I would love to add a few more points here regarding this news. As I said, German market is one of the biggest ones in Europe, but one of the hardest ones to crack. Some examples is that like Citigroup, Santander, and BNP Paribas have all failed to maintain saving products in the country, either pulling out entirely or focusing on more profitable niches such as car or consumer finance. So Chase is offering in the beginning one product only, an overnight saving account. So this is what they are starting with. And I believe like Chase or JPMorgan Chase in general is well funded. And hopefully they will start actively investing into the marketing in this market. And the company basically hoping to reach over 5 million customers in German market over the next few years, over the next basically 5 years. So let's see. It's an interesting move.
Let's see. We've talked a lot about blockchain and tokenization, Sam. The next news is on AI, obviously. Fiserv partnering with OpenAI. They are planning to integrate AI capabilities into the products used by the banks, merchants, and financial institutions. By partnering, they are aiming to improve operational efficiency, customer support, personalization, and the automation of the workflow. OpenAI technology will obviously help power the AI-driven financial experience at scale. And Fiserv, they serve thousands of financial institutions globally already, and making this partnership strategically important for AI adoption in banks, especially integrating AI into the existing infrastructure seems to be an interesting move rather than coming up with the new products, AI-based products. And that might be why OpenAI has seen a potential here to partner up with them.
Yeah, it's not only win for Fiserv, as you said, it's a win for OpenAI as well. So far, what I noticed in the market, like most AI products, was on consumer-facing side of the things. Chatbots inside the banking application to help you to gather insights about your expenses and how you could potentially save money or how you should spend and the trends and etc. But now we can see that a clear example of AI moving into like financial infrastructure, instead of standalone AI tools, now major players like Fiserv are embedding AI directly into the system that banks use. One of the insights here that Fiserv is one of the biggest players in the market. They have, if I'm not mistaken, if I remember correctly, they are used by 6,000 customers in the market, and like over 3,000 cores use their products and solutions. So they're basically directly going into infrastructure, and especially with this product, I think they could be helping more to not bigger players, but rather smaller players in the market who do not have resources to basically build their own AI solutions. So now what they will do is like basically go to Fiserv and start using the AI solutions in let's say improving their own flows and solutions. I think this is a quite smart move, basically to strengthen your position basically in financial infrastructure world, and especially as AI grows, you should be moving in this direction and try to win the competition that's happening now.
Do you think the move will be followed by the other AI labs as well, like Anthropic or Gemini and so on? Do you think they will try to crack into the financial markets and come up with their own products or partnerships like this?
I think they have to. They have to, because nobody wants to be left behind, especially the big three of Anthropic and Gemini and OpenAI. So once they see this partnership potentially growing, I think the first would be Anthropic. They will also start making partnerships with other major players in the market. Another example is FIS. They're also quite potential, partner. Maybe they are already, I don't know. I have to look into this market. Maybe they are already partnering with someone, or if not, then if they see this move from Fiserv, they may go and choose one other player in the market, and then start rolling out their own solutions. Because again, FIS is also one of the biggest players in the market and direct competitor to Fiserv and what they're doing.
I'm surprised you haven't mentioned XAI. As you know, Elon Musk was planning to build a super app within the X infrastructure, and XAI might be the next potential move to crack into the financial services.
Could be, but from what I read, XAI is far behind. These major players, they are trying to catch up, but the adoption, outside of X platform, is not that strong. That's why I was not thinking about XAI going and partnering with any payment provider. But yes, as you said, they are already working on their own. Financial solutions. Who knows? Maybe their own AI capabilities will be part of it. But again, I'm not really sure, taking into account the scale that they have at the moment. Okay, Otabek, the next news, Klarna delivers strong start to 2026 with $1 billion revenue and $68 million adjusted operating profit. This is a great news. Basically, the company reported GMV reached $33.7 billion, 33% year-over-year growth. Revenue $1 billion, 44% year-over-year growth, and transaction margin $389 million, 44% year-over-year growth, and adjusted operating profit $68 million, up from $3 million a year ago, which is very, very significant result, taking into account that Klarna was not feeling really well until recently. So Klarna is now live with over a million merchants, up 49% year over year. So in my opinion, these are very significant numbers, and as the news mentions, these are, some of them are driven by AI. And if you remember this news, when AI hype just started, Klarna, what did they fired a number of people, especially in customer support, saying that basically AI can do all of the work those people were doing, those employees were doing. Now, then after a while, they hired some of them back, saying that they still need human in the loop to basically do customer support and other things within the company. And I'm really curious where exactly AI helping them now to basically optimize the workflows and basically reduce the costs.
Sam, it looks like you can't make headline news without putting A and I letters into it. But to be fair to Klarna, they went through the roller coaster, and the results they're showing now is impressive, and it is showing that fintechs are maturing up and they're moving on from like grow stage into the more sustainable economics. The narrative around fintechs is now shifting from like pure execution towards the efficiency, margin, and scalable business models. The next news is coming from more conservative regulators, the Bank of England, softening up its stablecoin rules. The regulator reportedly reconsidering its stricter stablecoin reserve and operational requirements. The Bank of England, they seem to be increasingly focused on balancing innovation with systemic safety. They're still on the conservative side, but they are open for the innovation as well. The move reflects growing recognition that overly restrictive framework could push innovation elsewhere, which we are seeing at the moment. And as we always said, stablecoins are increasingly viewed as part of the future payment infrastructure. So it's good to see that the regulators, the conservative ones as well, are opening up towards it as well.
I remember this news when it came out. It got very strong pushback from the market. So now Sarah Breeden, Deputy Governor for Financial Stability, said the central bank's initial plan to restrict individuals owning up to £20,000 per coin may have been overly conservative, according to the Financial Times. As you said, like a more conservative player, they were pushing in this direction. But now it seems like they changed their mind because, according to news, they could potentially lose the competition if they move in this direction. The Bank of England is also ready to lower its planned requirement that at least 40% of stablecoin backing assets should be deposited with the central bank, earning no interest, and 60% invested in short-term UK government debt requirement that were more stricter than the in markets such as the US. As you see, they don't want to lose the competition, because if you look into the market now, basically, if I remember correctly, 90+% of stable coins are all the US based, and then the rest is the other currencies, which shows like a very strong concentration of US dollar based, basically, stable coins. That's why competition is a good thing. It's not a bad thing. As you can see, it pushes like even the regulators, very conservative regulators, I would say, to soften their stance and then try to win the competition. Otabek, if we move to the next news, it's also again around tokenization. Basically, BlackRock, Janus Henderson tokenized funds get instant redemption with new $1 billion facility. So Grow launched a liquidity network offering up to $1 billion in daily stablecoin liquidity for instant redemptions for BlackRock's and Janus Henderson's tokenized treasury funds. So the facility is named Basin, and it aims to fix the key weakness in the $15 billion tokenized treasury market by providing instant stablecoin payouts against approved redemptions, while underlying fund settlements proceed on traditional rails. Major asset managers and crypto firms, including Securitize, Centrifuge, Anchorage Digital, Galaxy Digital, and FalconX, are partnering on the platform as tokenized US Treasury products grow rapidly, and institutions are increasingly parking cash on blockchain funds. It's a very interesting development, Otabek.
It is. As we said, one of the bottlenecks of tokenization is the liquidity of the assets. Instant redemption obviously is a big game changer here. It brings tokenized finance closer to real world institutional usability. And it shows that the industry is now solving this problem. Liquidity will become less issue, and like it will not be just some experimental products. It will become more mainstream. Right. The other news is coming from Binance. Crypto will become invisible infrastructure, they say. They predict that crypto will become ubiquitous and largely invisible. They argue that users eventually will not notice when blockchain technology powers financial experience. They said that the focus is shifting away from speculation towards the infrastructure utility. Stablecoins, tokenized assets, and blockchain-based settlements are becoming core use cases. And the long-term vision is financial system where crypto operates quietly underneath user-facing applications. And Sam, to be honest, this sounds like deja vu for me, because a few years ago, people were saying that the best fintech is an invisible fintech, and now they're saying that the crypto will become invisible as well. It's all about how things work under the hood, and the user experience not knowing how it works is actually where the magic happens. What do you think?
Adding to what you said just now, Otabek, I need to highlight that Binance just hit 325 million users, and their outgoing CMO, Chief Marketing Officer, thinks this is just the beginning. According to her, what this is what she said, quote, "We sit at 325 million users and are growing, but we still only have 770 million as per latest research users that are engaging in crypto," end quote. Basically, the numbers are growing significantly. The user base is growing significantly, as you can see. And Conlon credits this to Binance's expanding product line, which now includes Binance Pay, tokenized securities, and interaction with decentralized financial apps. In the past 24 months, Binance Pay has facilitated more than $232 billion in transactions, according to Conlon, which is a very significant number, Otabek, if you look into it. And, even though Binance, it started very strong, in my opinion. At one point, they definitely had difficulties around regulation, especially in the US. Their founder was basically jailed, then he's out now. But now it seems like the growth is continuing. In my opinion, they will continue moving towards more regulation. I mean, what I'm trying to say is like they will become more regulated. They will fix all the issues that they are facing. They still have many more of them, but I think regulation and the governments are pushing towards more AML compliance and become following the rules that they set. And Binance will continue moving that direction. And it seems like their user base is continuing to grow, and they're in the right direction, basically. Otabek, basically continuing the news, OpenAI seems to be everywhere in finance. What I mean by this is that OpenAI launched a new set of personal finance tools in preview to ChatGPT Pro subscribers in the US, letting them connect their accounts and ask questions ranging from spending analysis to future financial planning. And all of this happened in partnership with open banking service provider Plaid in the US. Users can now connect over 12,000 financial institutions, including Charles Schwab, Fidelity, Robinhood, American Express, and Capital One. Once the users connect these accounts, they will see a dashboard of their portfolio performance, spending, subscription, and upcoming payments. This is a great development. So basically, now you have a financial assistant in the face of ChatGPT, not in your application, but basically now you can connect your accounts, be it let's say now banking accounts or maybe even investment accounts, to your ChatGPT, and it can give you insights. Of course, I need to read more about technical side of the things, how secure this is, and how much access OpenAI has to your financial information. Because, well, if you ask me, I personally wouldn't connect my account, at least at this point, to OpenAI, because again, there are many other tools that I can potentially use safely, and most of the apps that I'm using, financial apps that I'm using, they already give very good insights to what I am doing. But it seems like companies think that they should become, well, basically, OpenAI is trying to become, in my opinion, a super application where you can have literally everything, including your finances. Maybe in the future, then they will start now offering investment services, since they now have your financial institution, financial information. They can do analysis how you are spending, where you are spending, and based on that, now they will start you saying like maybe you should invest into this product or that product, and that way again they will expand beyond basic financial tools. So the new products come just 1 month after OpenAI acquired the team behind personal finance app startup Hero, which was backed by firms like Ribbit, General Catalyst, and Restive in April. You see, they are going active Otabek into finance, and I'm really curious how far they're planning to go with their solutions.
It's interesting to observe. Obviously, personal financial assistant is a game that many people were trying to crack, and AI seems to be the good tool to do it. But as you said, how users will be comfortable to share their data with OpenAI, that's a huge question, given all the publicity they had with their previous practices of training their models based on various sources of data. How people will be open to kind of open up very personal and intimate information about their finances to an open platform. That I think that will be a bigger problem to solve for OpenAI. They already have trust issues in the public, not only in US but around the globe. But this kind of developments is interesting, and it is very obvious based on the news that we have read today, even that OpenAI is actively going into the financial services market. But I think they have bigger problem to solve, which is the problem of trust.
Absolutely. Otabek and people who are watching us, those were top and breaking news in the world of tech, finance, AI last week that we want to cover in this episode of On the Ground. Please let us know what you think about this format, how we can potentially improve. And do not forget to share this episode with your friends and subscribe to our channel.
We are on all platforms that you use, so we are closer than you think. Find us on YouTube, find us on X, sign up to our newsletters, and follow us on other major platforms as well.
See you next week.